Hello, today is Tuesday, the 23rd of December, 2008, and this is Brian Shannon from alphatrends.net. The market's closed here. We saw some losses again today. The NASDAQ was down 0.5% as measured by the NASDAQ 100 Trust. The Q's here on the screen right now. And it was as expected on diminished volume once again. So we've got obviously a half day of trading tomorrow. I'm not going to be trading. I'm going to head up to the mountains for a day on the slopes with my family, and hopefully you guys have something better to do because it'll likely just be a very low volume, choppy environment. If you are going to trade, be quick to take your profits because they may evaporate quickly in that environment. The NASDAQ does remain above this 2875 level that we've been looking at as the first level of support, but we've got a declining 5-day moving average here on the 30-minute time frame, and then of course on the daily time frame we're below the 10, 20, and 50-day moving averages, and the 50-day moving average is declining. So it's more likely that it will continue lower, probably down towards this level eventually at to the next logical place where we'd expect to see some buyers, as there was support there once before. But again, you always have to be prepared for anything. Looking at a 10-minute time frame, we had this level break this morning. This is where we found some resistance. Yesterday afternoon, we saw that late day strength followed through a little bit this morning, but it's below a declining 5-day moving average. It did drop off back below there and below the daily VWAP right in here. That's where we saw further downside, and this afternoon it just turned into a very choppy environment. Hopefully you didn't get caught up in that. So the NASDAQ obviously remains in a downtrend on the daily time frame and on the weekly time frame. On the 30-minute time frame, if this level gives way near about 2860, let's just say, then I think that you've got a chance that we'll continue down towards that $27 level. So still got to be very careful. Oil, still no sign of a bottom in there. It was down once again today, another 2%. So just stay away from this thing until at least you get that 5-day moving average to flatten out. If you're looking for holding for more than an intraday one-day trade. But here we saw a little bit of strength early. It experienced a very strong sell-off below the daily VWAP, got back above it, and just kind of very choppy, low volume at the end of the day. So again, no signs of a bottom. Stay away as far as if you're looking for a long opportunity. That's not the place to be looking. Russell 2000, continuing to hold above this little trend line here that's more easily identified on that 30-minute time frame, but it's touched this trend line. Now we can say 1, 2, 3, 4, 5. Here we are, the 6th time to touch it. So I think if that breaks, and here's where we've seen some support, obviously, with this little level here from that gap as well. We've got the lower high. We're below a declining 5-day moving average. More frequent test of that trend line support and just traditional support here at 46. I think that you could expect that probably the next drop will be down towards this 44.75 level, and then perhaps $44 a share. The danger remains skewed to the downside in all these markets. It doesn't appear as though we're going to get any Santa Claus rally or anything like that. The global macro economic backdrop is just too negative right now for anyone to have any conviction in these rallies, and it seems that they just get sold into every time that the buyers pop up. The semiconductors back below that $17 level, so and closed below it, pretty significantly, I'd say, just enough to say that it's really truly broken that level, 41 cents below that $17 level. So here in a 30-minute time frame, we had seen the lower highs coming into this and this lower low yesterday that briefly was at the end of the day yesterday, it briefly rallied. But back to that 30-minute time frame, we've got a clear pattern of lower highs and lower lows, a declining 5-day moving average. We've got potential for some support right there. And here we are meeting up with this prior level here. So 17 was broken. Now it's dropped down to this next level, and then perhaps 16. Not a reason to be looking for buying. I'm just showing you these are potential areas where the market may slow down. Perhaps we're just going to start turning more sideways. Again, in bear markets, if they don't scare you out, they'll typically wear you out as the buying and selling pressure kind of reaches an equilibrium and turns more sideways, undergoes some accumulation. But it's a longer term process. It's not something that you have to get involved with right away. There's still a lot of badly damaged stocks out there, still a lot of stocks that look like they could have a lot further to go on the downside, and there's actually some good intraday opportunities on the long side as well. So you just got to continue to treat it as a trading environment. That's all it is. The financials were down 2.3% with their 28-cent loss here on the XLF. Obviously, we remain below that $13 level. We've got a pretty easy to see lower high here recently on the daily time frame, and breaking below this low here at about 11.25 would lead to a lower low that may see a little bit of panicky selling that brings us down to the next levels. Looking at a 30-minute time frame, that next level would be down here at about 10.5, and we can see that 11.5 is where we have support right now. That's where we are. We've got this lower high, and if this level gives way, then perhaps we're going to drop down. We've got a declining 5-day moving average, so you want to be very suspicious of any rally attempts in here, and just continue to exercise caution. It seems as though the selling is going to continue right up through the end of the year. And turning the calendar or putting a new calendar up on your wall doesn't change anything as far as the market goes. A lot of people expect January 1, this is going to happen or that's going to happen. And a lot of times in January, we've seen it in previous bear markets. First 4 or 5 days of January, we get strong rallies and everything. Well, as January goes, or the first 5 days of January go, the rest of the year should go as well. And that's just that's just one of those little Wall Street sayings. It's kind of foolish, no more foolish. They were just as foolish as don't fight the Fed. The Federal Reserve has been cutting interest rates all year, and the theory of that don't fight the Fed is when they're easing monetary policy, you should be a buyer of stocks. Well, they've been easing monetary policy all year in here, and even just last week, we'd seen the 0.75% drop in the target rate of the federal funds, and obviously we remain below that level. That's right in here. So these excuse me, these markets short term are affected by decision making like that. It's just the same as how many times has OPEC said that they're going to cut their production during this decline, but the sellers keep coming. So listen to price. Only price pays, not the news headlines or your interpretation of them. It doesn't always seem to make sense, but the only thing that really needs to make sense is the only thing that pays you or hurts you, and that's price. That's why you need to look at price action first and foremost. The S&P 500, though, we're seeing a similar little trend line in here, and maybe I didn't draw that quite right, but we've got this level at about $85 a share. That if it breaks below that, then I think we're out of this little recent range that we've seen in here, 85 to about 92.5, and that could pave the way for a little bit further downside, perhaps down towards, there's that 85 level. We look in here, and I'm looking at a 120-minute chart right now. So this is $82 a share, and I've got a 16 and a 33 period moving average, which approximates the 5 and 10-day moving averages. So that red one would be the 5-day moving average. The blue would be a 10-day moving average equivalent. You can see they're both declining, and the 5 is below the 10 as well. So we've got this market looking like it's still in trouble and perhaps heading down towards this $82 level. I just want to go back quickly to the financials because I'd failed to point this out, that this was the inverted, or not the inverted, but the head and shoulders pattern that I had mentioned earlier in the week, and it's clearly broken. Now we've got this support in here, and if you remember, the height of this would measure down towards about that $9 a share level. That's not a call for what I think will happen. So if I take the height here, add it to the breakdown point, which was right there, that's where you get that price objective. But these markets, we're still in a downtrend. There's just bad news every day, and the bad news isn't being bought into. If the market were rallying on bad news, then you could be maybe a little bit more confident in some of these long positions. But the news is bad and the price action is bad, so you've got to just remain very nimble. Everybody have a great holiday. Merry Christmas, Happy Kwanzaa, Hanukkah, whatever you celebrate. Have a good day. Thanks.